Hello and welcome to Leviathan News. It's January 6th. I'm your host, Sam McCulloch, and I'm here with the wonderful DeFi advisor. What's up, sir?
Hello, sir. How are you?
I'm good.
Nice to be on.
Yeah, it's great here. Today, we also have a special guest, Sebastian Buergel from HOPR, who is here to be under the hot seat. Welcome.
Good to meet you guys.
Well, it's great to have you here.
Anyway.
Yeah. And we're going to jump into privacy and HOPR in a little bit, but just want to talk about a few news stories before we get there. Some stuff that happened in the week that we can wrap up on. The first thing that I saw today, which I thought was a little interesting, was that BitMEX is planning to send Bitcoin to the moon, like literally. So BitMEX is going to put 1 BTC on a payload that is going to the lunar service. They're going to put the private key and just drop it there. So the Bitcoin weighs 43 grams and it has 1 BTC on it, and it's going to be carried on a Vulcan rocket that is tentatively about to be launched on February 23rd, 2024. That's pretty cool.
Yeah, sounds like the official beginning of the bull market, no? If people are already sending BTCs to the wallets with BTCs to the moon, sounds like a vibe shift.
Exactly. What's your moon outlook, Sebastian?
Oh, on Bitcoin, you mean specifically?
No, I mean actually going to the moon.
Oh, of actually going to the moon. I do think that humanity will go to the moon. I'm not sure if I would go to the moon. Being enclosed in closed rocket spaces, I don't know if that's my thing, but yeah. I definitely think that the generation after us will 100% go to the moon.
Yeah, hopefully we go back and we can prove the conspiracy theories to be true, that we never went in the 60s. And maybe it's one of those things where we send 1 BTC to the moon, and then 100 years in the future, it's worth so much that we have to have some exploration expedition to go out and find the thing.
Yeah. Someone has to find that BTC, that 1 BTC. Someone has to grasp it. It's such a big opportunity that you have to start a rocket company and go for it.
The big news, though, is that we're getting really close to the ETF launch. Scaramucci came out and said it's done yesterday, which is kind of subtexting that it's going to be launched soon.
That was so obvious, man. Yeah. I don't know, at the beginning of the week when we were talking about, they're now going to postpone it, it immediately felt like, okay, they want to grab some more Bitcoin. Why not?
I think it's still up in the air, but we're getting reports. So this is from Fox News saying that the guidance is that the spot ETF is coming hopefully next week, and there might be different timetables, but they might be all at once. So nobody really knows, but we might see something. And so it's coming. I mean, hopefully it's today. We might get news today. We might get news on Tuesday.
Wow, today? It's possible that we have the actual what? They're declaring it, announcing it? What do you mean?
Yeah, potentially. I mean, the idea for going into today is they announce it right at market close on Friday, and then the weekend goes.
Oh, wow.
Yeah, the weekend goes.
So that Binance is happy when people pump it over the weekend on Binance. I can see how that makes sense.
Yeah, but we get the weekend, and then on Monday or Tuesday next week, or even Wednesday, then we get the start of trading on the Bitcoin ETF because they're all ready to go.
Wow, they're actually that's sounds like it's happening. My bet, when you say it like that, my bet is that it's actually going to happen. But who knows? Maybe I'm just thinking about it because it's my birthday tomorrow, hopefully.
Oh, really?
Yeah.
Oh, congratulations.
Thank you very much, both for me and for the industry. Maybe if we actually get the spot ETF, it can. I actually think that it can really create like bull market vibes, something that, to be honest, I really think it's a big deal. But you never know with markets how much of that stuff is actually priced in, and whether or not. I'm talking to some traders that tell me that they actually expect that the markets are going to go down once they tell about the ETFs.
I'm sure the markets will move a lot once it's announced. Everybody's kind of on the edge of their seats, waiting for it to come. Yeah. It's going to be a pretty interesting rollout. We had a Fidelity, ARC, Grayscale, all file Form 8A, which allows for, it's essentially like a request to enable exchange trading for the spot Bitcoin ETF. Also a good sign as well too. So everything is pointing to go for the ETF, either start like approval today and then starting next week, or approval by Wednesday next week and then starting a few days afterward. Back to ETHland, Celsius has started unstaking its existing ETH holdings. So I believe it has $850 million worth of ETH that is coming out. They had been selling for the past couple of months, and now right before the ETF announcement, they announced that they're going to be removing all of their staked ETH so that they can distribute it back to their affected parties.
So they're not going to dump it, right? They will just distribute it back?
I believe so, yeah. Yeah.
Okay, because if that's a big bag if that would get dumped. Yeah,
I don't think it's 800. I think it's about 350 million. But still, that is pretty large. And if they are dumping it straight into the market, then that BTC ETH.
I can't buy that.
I know. You need to launch your own L2, Sebastian. That's what it comes down to.
Yeah.
So, sorry. So Visa also announced a Web3 loyalty program with Smart Media. This is interesting as Visa is entering the Web3 space. It's going to give customers digital wallets that collect tickets, loyalty coins, digital collectibles, and other perks. I guess it's just like a next offering, right? Like if you think about like what can be integrated with Web3, it looks to be, just like the next step. Glad to see that we're seeing big companies come. Okay, so the big ETH news that we've seen this week is that Athena Labs broke $100 million for USDE a month, or like in the first month before the public launch. Athena Labs is coming out later this month, before the end of January. So
this is the product supported by Arthur Hayes, right?
Exactly. Yeah.
Yeah. Well, I was talking to it about it with Kmetz a bit. You know Kmetz, my friend from Aladdin DAO. So he was, because I understand that Athena is kind of a centralized version of FOX, the new protocol by Aladdin DAO. So to be honest, I'm actually, personally, I'm very excited about what's happening with Athena, because I think it's actually going to draw a lot of attention to FX. But of course, I'm biased on it. Guys, do your own research and know that I am holding Aladdin assets and whatever. It's a big deal for me. But in my opinion, definitely something worth for you guys to explore as well with FOX. Definitely when I see such huge, the amount of marketing that Arthur Hayes can pull in is, in my opinion, I don't know. He's something else. He's just next level.
Yeah, it's a really interesting concept. I think we're going to try to have the Athena Lab guys on later this month.
Amen.
Once it gets closer to launch, but it looks really cool. I'm really excited to see how it launches. Okay, so we also had some responses to hacks. DYDX came out with a postmortem on the sushi and Wi-Fi incident. If you don't remember, Wi-Fi got pumped from 6,000 all the way up to 10 or close to 10,000, and then essentially dumped within a few days. Apparently, it was all market manipulation that was taking place on DYDX. Someone took a large short, or sorry, they got spot long on Wi-Fi, and took also additional longs on DYDX as well too. They then pushed the market up to close to 10,000, switched all of their longs into shorts, and then dumped their spot position. DYDX is saying that they reached out to law enforcement, that they've passed on this information, and they are essentially trying to roll back that trade.
Wow.
Yeah.
How is that possible to roll back a trade?
Well, you go to law enforcement and go see the person.
That's a whole big rabbit hole once you start going that way, I think.
Yeah.
When you undo trades and stuff like that. But I do think that sophisticated participants are in many cases malicious. That's a part of reality. I don't think it's something that is just relevant for crypto markets. This is relevant like for everything, every industry, whatever people do, wherever there are people. This kind of stuff is always going to be a part of the game, and I don't really know my thoughts about it because like I don't really like the fact that there's an exchange that can undo trades in a way. That's also a problem. That's all I'm saying. I'm not rooting for money to be stolen or something like that, but I do think that undoing activities is kind of weird.
Yeah, so it's it's kind of like an ongoing thing, right? Like DYDX has had these incidents. They had it on Wi-Fi, they had it on Sushi. They just had a deleveraging event on Sui as well too. So they were like reverted open positions. So Sui didn't have enough liquidity when it came to DYDX. Somebody had too large of a position, and so they had to deleverage profitable trades. It's all just kind of tough. I mean, it really is for these on-chain perp dexes where everything's like smart contract based. And then last we have Radiant, who suffered a hack a couple of days ago on January 2nd. It's like we can't even go one day into the new year without having a hack. And they suffered a flash loan, and so now they're voting to use existing DAO assets to pay back affected parties. And this is going to be a total of about $5.2 million. They're going to repay with liquid DAO funds.
But how much of the actual amount is it? Is it the big part of the amount? Is it all of it?
I don't know how much of the treasury it is, but it looks to be enough where they can recapitalize.
Meaning to actually repay all participants that were affected?
Yeah.
That's going to be, I think that's actually going to become in a way the standard, because hacks are going to happen, but how different protocols and teams and projects deal with hacks and make sure they actually take care of their communities and like users and secure their funds. I think that's the actual process of creating the trust between like all participants of the ecosystem to actually make retail like consider using the things that us weirdos are actually using right now, but for most people are still like, I'm talking to a friend yesterday. I was talking to him, and he sees the opportunity. He understands a lot of the stuff that I'm talking to him about, but also, and I'm like honest with him as well. Like there's so much risk involved when you when you actually invest in crypto markets. This is not the place for security. It is the place for opportunity. You're muted, I think so.
Yeah. So it's that kind of wraps up everything for the week. I mean, ETF news has been like the big story, and some of the other hacks as well too. Really unfortunate that we've seen so many protocol exploits just in the first like 10 days of, or not even 10 days, but like first week of 2024.
Not even.
Yeah. Well, I'm sure hopefully we'll have a better 2024. Yeah. So our guest for today is Sebastian. Noted lobster and founder of HOPR. HOPR is a data protection protocol that is essentially almost like a layer 0, if you want to call it that. And
yeah, that's a good way of putting it.
Yeah. So you guys launched back in 2020 now? And
yeah, exactly.
Yeah. So maybe you can give us a rundown of what's happening with HOPR and what you guys have kind of been building for the past couple of months now.
Yeah, totally. So connecting to what you just had in the news, right, where we see hacks and exploits and issues, I think this is kind of a human thing. I haven't framed it like this, but I think, greed and bad behavior is deeply ingrained in humans. We're kind of bad animals, we like to screw each other over. We like to, fuck up things. That's just what humans are. And crypto in general, anyway, what crypto should be to me is trying to put that in check, trying to contain the damage that each of us individually can do, and we can still safely interact, right? So, proper decentralized exchanges, unlike what we've just seen what DYDX did, should not be able to unwind anything, They should be able to provide credibly neutral platforms for all of us to interact with. And that's why decentralization, right? And we all know that. There's nothing new here. But the thing that I find very important is it's not just decentralization, it's also privacy. Because, what does it help if we have a perfect decentralized thing, if everybody can spy on us all the time? And that's what we work on at HOPR. We want to bring privacy to the mix. We think that it takes decentralization and privacy. So in fact, I argue that a properly decentralized world needs more privacy, because otherwise, today I trust Twitter a bit, right? I trust that Twitter doesn't just broadcast my DMs. Even that's not great. And let's face it, as we think about Ethereum, I trust Infura. I trust that Infura doesn't just, blurt out my entire metadata that they collected from me, link all my accounts and put that on Twitter or whatever. People are working on decentralized RPC providers, and that's great, right? There's projects like Pocket Network, LavaNet, and so on. But as these guys decentralize, what is the trust assumption? You don't trust like one provider anymore, that shouldn't data harvest you and kind of pinky promises you to not data harvest, but you're trusting some rando on the internet. And that's actually a worse trust assumption, right? So properly decentralized systems have worse trust assumptions than centralized ones. So the decentralized world needs privacy much more than what the internet needed so far. Anyway, that's just the motivation. And what do we do at HOPR? We bring data, not on-chain stuff, but data privately from A to B. So you can think of HOPR like a next version of a VPN. Or for the ones who are familiar with Tor, who might have used the Tor browser, it's a more private version of the underlying Tor network. And that's the infrastructure, fundamental infrastructure that we built. So I can talk to Sam without DC Advisor or the advisor or anybody else knowing that Sam and me are exchanging information. Because many people don't really think about that, right? So when Sam and me are talking, at least our internet service providers, but actually a whole bunch of other companies and for-profit organizations in between us that literally run the internet, see that Sam and I are talking right now. And they don't know the data because it's end-to-end encrypted. But but this data is visible to a bunch of people.
Yeah. So if just to highlight this, Consensus who owns MetaMask and runs it actually came under some controversy last year or 2 years ago in 2022 when it came out that they were essentially collecting all the information about wallets and your RPC calls and pretty much everything, your IP, so that if you just use the default MetaMask wallet settings, all that information is being transmitted to Consensus.
I get there's people that read this, right, and say, okay, I don't care. They know my IP address. So what, right? So let me ask you this. You have probably more than one, all of you have more than one Ethereum address, right? I mean, just talking about myself, as most Ethereum users, I have an ENS domain, which is linked to my name, right? You can link it to my Twitter. I also get my salary in ETH, which, is nobody's business to know. And I have a savings account. And these are all separate accounts. I try to separate stuff properly. But most of us are interacting with them, and you're interacting with them from your home, right? So you do that from your home, and now Consensus and other RPC providers, I just don't want to, hate just on Consensus. It's just a structural problem in the Web3 today. They all can link all these accounts, right? They know your savings account, and they know it's you because they can link it by means of your IP address to all your other accounts. And that to me is really messed up. And that is the real problem. And people say, I don't care about my IP address. Well, right. But, IP address is a means to link all your accounts, and that's really messed up. So, basically, how do we prevent that, right? How do we take this IP address kind of as toxic waste out of the system? That's basically the goal that we have at HOPR. And what we're doing is we are relaying data via multiple intermediate relay nodes, right? So there's HOPR nodes. You can run a HOPR node. And when you do that, you are actually relaying traffic for other people. So if I'm talking to Sam, you can write a chat app on top of HOPR, and Sam and I can talk, and nobody knows that it's Sam and Sebastian interacting. And also, actually, and that's kind of interesting, Sam doesn't get to see my IP address, right? And no other centralized server operator in between doesn't. Yeah, and that's fundamental infrastructure. We can later on talk about, that we're building actually something very exciting on top of it, a private RPC provider actually, that everyone who's listening to the show can use. Yeah, exactly. So, and this is something that everyone can use. It's the first RPC provider that actually cannot track you. I know there's RPC providers which say that they proxy your requests. But I just want to spend, half a minute explaining what that means. It means they replace one server, this RPC server. Sam talked about consensus, and replace it with a different one. And my question would be, why do you not trust this one server, but you do trust this other server? Like, you're replacing one thing for another, and that's not great, right? So you can sign up for RPCh, and RPCh actually routes your requests through HOPR nodes. So it hits multiple HOPR nodes on its journey to the exit node. So the RPC provider basically sees the last HOPR node in a chain, but they don't see the first one and they don't see you. So it's properly private. Like RPCh is the most private way you can interact with Ethereum today. And so you can use that service today. It's still for a bit more technical users this far. This is a Docker container, so it's pretty easy. If you've ever used anything in Docker, you can just do that. If you've never used Docker, well, here's your opportunity to learn something new. So that's the product as we have it right now. But yeah, there's plans to make this way easier and integrate it into wallets. That's our plan, actually.
So the RPC space has actually really grown a lot in 2023.
Oh, yeah.
And a lot of the focus was not really on privacy, but more on MEV protection, and essentially saying like, oh, hey, like, let us route your transactions, and we're not going to front run you, but we're just going to back run you, and we'll give you a rebate. And so, like, I guess people have made the trade-off to say like, okay, like, we don't want to be subject to any sort of sandwich attacks, or we want to have like optimal routing for our transactions, and so they've taken that route. But like you're saying, the privacy elements are questionable when you use those other providers.
Yeah, that's actually a very good point. And actually, that's something you can also get with RPCh. So if you use RPCh in Ethereum mainnet, we route the requests, the transactions that you send via propeller heads. So propeller heads not just prevents you from getting sandwiched and front run. They actually automatically backrun you, and if there's profit to be made, they forward 100% of these profits to you, which is kind of cool. So it's not just that you don't get sandwiched or don't get attacked, but also if you did a stupid trade, for example, you bought some shitcoin on Uniswap, but there's actually a better price on SushiSwap, they will automatically, yeah, exactly, that's propeller heads. They will automatically backrun you. And forward the profits to you, which I find really cool, actually. So that is provided out of the box within RPCh, and yeah, a reason why I use it every day.
So this would be like, so it plugs into like existing MEV solver quasi intent
yes
infrastructure.
Yeah, exactly. So basically, behind the scenes on the RPC side, we don't change anything, right? There's the same providers that we send transaction via propeller heads. But you can actually, if you say, hey, I have my preferred, RPC provider for whatever reason, you can connect that with HOPR and RPCh. By the way, RPCh stands for RPC over HOPR. That's what it should signal. You can basically just change the connection. It's just a connection between you on the one end and this RPC provider on the other end. The stuff between is what brings privacy, right? So we relay your request and response via these intermediate nodes so that the RPC provider doesn't get to see your IP address and thereby cannot link your accounts.
And so how does the economics of that work? Like, what's the incentives for the, I guess, HOPR nodes in this case to run these transactions?
Yeah, great question. So basically, by the way, a HOPR node doesn't even know that it's a transaction, right? So the HOPR nodes in between, They just see data packets. It's completely opaque to them, like what is even going on there. They don't know, are Sam and Sebastian chatting here? Are they just other HOPR nodes that are sending data that they also don't know what it is? But it's completely invisible to anyone in between what is going on and who's sending data to who. So why would they do that, right? So why would anybody run a HOPR nodes? You would do that similar to ETH stakers. So validators on the Ethereum network earn ETH. And in the same sense, people who run HOPR nodes earn HOPR. And I find this kind of analogy actually kind of interesting because the mechanics work actually very similar. So if you think about, for the ones who maybe don't run their own Ethereum validator, what do validators on Ethereum do? They secure the Ethereum chain. You stake ETH, then you create a block every now and then, and for that you earn more ETH, you get paid. And this is actually very similar for HOPR. So if you run a HOPR node, you are staking HOPR. You're of course not creating blocks because HOPR is not a blockchain, but you transmit data privately. So whenever you relay a packet for Sebastian, for example, who might be using RPCh, RPCh is paying that HOPR node operator in HOPR tokens. So every single HOPR packet that you get paid, that you relay gets paid in HOPR tokens.
So we saw a Tor come out this year, which was kind of like trying to put a token on top of the Tor network, and it got shut down.
Yeah.
And like
that was a bit of a weird thing, by the way. Yeah,
it was a little weird.
It's
wasn't
like
it?
Tor is such a long-running project, and then it's like, huh.
So this kind of serves a singular purpose for transmitting data packets, but it's not handling services like a Tor where it's completely trying to like obfuscate the internet traffic. I mean, it's doing it the same way, like you said. It's similar to Tor, but it's built for specifically EVM calls and other types of data packet transfer.
Yeah, well, so here we have to differentiate between HOPR, the underlying infrastructure, which is really general purpose. You can build anything on top of it. I'm not sure if we will see kind of browser traffic on top of it, just because MixNets tend to be a bit slower than Tor, and it's kind of difficult to optimize general purpose traffic. But yeah, we can very well do that for specific API calls. So we can do that very well for Ethereum wallet calls, right? I mean, Ethereum wallets tend to be not very fast anyway. So if it takes half a second longer for your packet to traverse through this multi-hop route on the MixNet, that's fine. So yeah, HOPR, again, general purpose infrastructure. On top of that, we built RPC over HOPR, RPCh, which is this privacy stuff that you use for your EVM wallet. So it is, in a way, the underlying HOPR is a bit similar to Tor, but actually it's more private. So actually Tor, and many people don't know that, people think that Tor is perfectly private. Well, actually it's not. And there have been researchers who've shown that for at least 5 years that you can actually de-anonymize Tor users. By basically following packets as they hop through this Tor network. And in HOPR, you can't do that because packets look indistinguishable and they get shuffled. They get mixed up on every single relay node. That's why HOPR is called a MixNet. And it's mixed network, not to be confused, by the way, with mixers, like on-chain mixers. We're not Tornado Cash. We don't mix your funds. You can not use HOPR for money laundering. They are, they provide more privacy. So MixNets like HOPR provide more privacy than Tor.
So I wanted to actually ask you about something that's like adjacent, and that's this like intense-based architecture that's being built out. The way that I see it is essentially like a quasi payment for order flow system, where you're essentially broadcasting your intent, your like transaction, and then you have solvers on the other side who are essentially like auctioning or competing for that flow. Like what does that mean overall for Ethereum privacy going into the future?
Yeah, so basically, I mean, intense for me is more, it's more than just the financial things, right? It's just like, so far, whenever you send in Ethereum transactions, you have to do something very low level. You have to say, I go to Uniswap. I go to this particular Uniswap pool, and on that one pool, I want to dump my ETH for USDC, right? And actually, when we think about it, for the people who are not so familiar with these intents, it's like, you don't really care, right? You don't really care that you do it on that particular Uniswap pool. You don't actually even care about Uniswap. You just want to dump your ETH, get USDC, and buy yourself, you know, whatever fantastic thing you want to buy yourself with that. So, and that's what intents are basically about. So intents have this idea of saying, okay, you just say, I want to dump my ETH and I want to get USDC for it. Give me the best possible price for that.
Mm-hmm.
And there's a bunch of places where that can apply. You can think about the same thing for lending markets also, right? I want to deposit it somewhere where it gives me the highest amount of yield. And yeah, so with regards to privacy, I mean, the interesting thing that I'm thinking about is, how do users actually send these intents? How do they broadcast that? What apps are they interacting with? Like, one that I like, by the way, is CowSwap, right? So CowSwap is basically a DEX aggregator, but on the other hand, CowSwap is also allowing you to kind of be, you know, you just say, I want to swap ETH for USDC, and they figure out all the magic.
Yeah.
Now, I'm mostly concerned about these apps, right? Because in that process, there's a whole lot that you disclose before you hit even the mempool. Like, to whom do you disclose your intent? If you're a trading, for example, if you're trading a long tail asset and you disclose this intent to some solvers, well, you know, this solvers, or whoever that network or service operator is uniquely positioned to front run the mempool. So all these ideas are very cool, and people think about them from market efficiencies perspective. And to me, that is kind of a bit of futile look, because if you think about everything from market efficiency perspective, chances are we are going to come back to square one, which is Wall Street, which is a bunch of guys in suits that will be, you know, uniquely positioned to screw over all of us. And I don't want to see that. And that's why I work on privacy infrastructure that, you know, tries to make that better and have it decentralized and resilient, even though it might not get super efficient in that way.
Yeah, it all kind of ties in with this like modularity thesis, right? Where if we separate all the parts of the monolithic blockchain, you know, we can take off data availability and consensus and execution. You know, the RPC is also part of that as well too, and also the intents is essentially part of that as well too. Where, you know, the mempool, I know there are some groups out there like Flashbots and stuff that are essentially trying to make their own private mempools, right? That especially for the L2s, which have different like consensus environments and how the order execution goes and order sequencing. The idea for them is to like move into these private environments where the again, it's just like a payment for order flow system, like you would see with like Robinhood or something else.
Yeah. I mean, I would say modularity doesn't necessarily end up in a better world, right? So modularity could also, I will draw a dark picture now, right? So modularity could also end up in a world where we have all these modular components, and the most efficient one in each category wins. And the most efficient one also reports everything that's going on to fucking Gary Gensler, right? And, you know, is censoring people who it doesn't like, you know, and is bribing people to pay them, you know, out of band, some bribes in order to use the system, right? Basically everything that's happening in today's financial world. I have the hope that by combining these technologies, we will get to a technology stack which is empowering the individual. That is the one thing what Web3 is about for me. It's about empowering the individual. That you can kind of mix and match components in the infrastructure stack which bring the most resilience, not the best execution, not the fastest experience, because again, that will just bring us back to step one. So I hope that we see in this modularity stack more privacy appear. So we bring privacy on the transport side. There's people working on on-chain privacy. I'm personally very excited about privacy respecting L2s.
Yeah, I mean, if we can have privacy up and down, where, you know, the at the RPC level, where the transaction distribution is private, all the way up through the like the bundling, and then solving and execution as well too, and then additionally on chain as well too, where you can obfuscate using like ZK or other types of like asset aggregation to keep private transactions actually private, or transactions actually private.
By the way, Sebastian, how far away do you think that we actually are from having these like services available for users who are not sophisticated? Because I think that at least at the moment, as a very basic user, if you want to have any privacy regarding your actions in the crypto markets, no matter the way you choose, you have to be really sophisticated in order to keep your privacy. So how far away are we from actually having like an easy way for this stuff to be handled, and us like just enjoying like UX wise, I mean, of course.
Yeah. Oh, honest, I mean, this is the answer that many people don't like and will disagree with me on. Very far. I would say we are at least 5 years away from, safe and scalable and useful UX. And why do I think that? Because, none of these systems that we have right now, all these L2s right now are ready for showtime. None of them. They're actually further from it than people think. So we now see the first technical ideas that people could work on. It will still take time to figure out the details, and then it's making them secure. And then it's building apps on top of that. And only then it's about building UX. So I think we're far away from that. And like, I'm personally, I'm happy to see that people think about, don't try to cut corners, don't try to rush this and, build a stupid systems that don't work or get people wrecked. I mean, some people do get wrecked, obviously. That's part of the process, unfortunately. But like thinking about HOPR on our side on RPCh, right now, you need to be a somewhat technical user, right? So right now, you still need to mess with Docker containers. That's a mess. Nobody wants that. I don't want that. So like our personal goal plan, I think we will be faster. We will be, over the course of 2024, we will roll out this product into wallets. So you don't need to understand what the fuck HOPR is. You don't need to understand any of these things that I just explained. You just run your wallet, and your wallet will just be more private by sending your transaction and your calls, not just transactions, right? Also, just to check how many ETH you have on your balance, how many ERC20 tokens you have on your balance. All that will be sent through HOPR, and that will be done under the hood for you. And honestly, I think that's the way to go. So, a lot of this complexity, we talked about intents and like transactions. I hope that we will see apps that people build that, abstract that all the way. To really get there, and again, get there in a safe way, it will probably take years.
So coming from a privacy aspect or privacy expert like yourself, like what is the setup that I should have as a user to remain as private as possible?
That's a very tough question, actually, but let me try to give the best answer today, right? So first of all, what is important is if you really want to stay private, the best thing you can do is run your own Ethereum node. So, I would recommend everybody to run a dApp node, and I personally, of course, have a HOPR branded dApp node. So it looks like this here. But this is basically, it's an Intel nuke, right? That is pre-configured. You can buy from the dApp node guys. It's a really cool project, very grassroots projects that makes these boxes, pre-configures them, and you can, just like in an app store, you can install a HOPR node. You can install an Ethereum validator. You can install a Gnosis chain node on it. You can run a Bitcoin node on it if you lean that way. So that is important. Why is that important? Because in that way you can connect your own wallet to your own node, and not rely on Infura and any of the other centralized services that we discussed before to serve you data, right? So that's number one, which is important. And I mean, what then also when it comes to interacting with apps, right? So I really wish people wouldn't just rely on centralized cloud-hosted services. I just want people to think about that. Like, what do you think happens when you enter your entire portfolio into Zerion, into DBank or whatever? Well, you tell somebody else, dude, this is all my money. Look at me, And maybe that person to whom you disclose it doesn't keep it for themselves, even if they try to. So don't rely on cloud hosted services that you hope keep your information private. Like, I would put it this way. If you're not fine posting something on Twitter, don't post it to a cloud hosted service. So if you wouldn't, put your entire personal net worth on Twitter, don't put it into any of these cloud services.
Okay, so let's talk about that tech stack again. So it's get a HOPR node, which you can get through DApp node.
Well, it's sorry, I would say get your own Ethereum node, right?
Node,
we have these HOPR branded nodes. Exactly, you got it up there. Yeah. So on this thing, you cannot just run a HOPR node. You can also run an Ethereum full node on it, right? So you get the entire information of your account from the Ethereum blockchain from this device, which you hook up to your MetaMask or whatever wallet you use.
I think the cost of these has increased, or maybe just the capabilities within, because I think I have the original HOPR node.
It was way cheaper, yes.
It was
so
like
the Avados,
yeah,
the Avados were way cheaper. So the reason why this one is way more expensive is because it has a pretty big ass SSD inside.
Mm-hmm.
There's 32 gigs of RAM and also a pretty powerful CPU. So you can really run a full Ethereum node and also a validator on it in parallel on the same device. And that's something that the small original one could not do. Yeah.
And then you would run this with like a VPN and then use HOPR as well.
This is now an interesting question, right? So if you run your own node and you sit at home next to your node, you don't need a VPN, right? Because you can connect to this thing locally. That's best case. So what do you do if you're not at home, right? So if you're not at home, what is very cool, these DApp nodes, they come basically with their inbuilt kind of VPN. So you can connect via, something like a VPN called WireGuard that I use on my mobile. I can always connect to my node at home. So also on my mobile device, I can connect on my mobile wallets. I can connect to my DApp node at home, which is very cool.
Oh, that's cool. And then it runs all the transactions through the HOPR network. And so, like, if you're running the HOPR node, does it automatically have the RPC capabilities in it?
These are two separate things. So you would run a HOPR node because you want to earn APY on your HOPR token, which is used, by everyone who relays data through this network. And so if you connect to another chain, let's say you do something on Polygon. Like I mentioned Polygon because it's completely impossible that you run your own Polygon node. It's just Polygon is too heavy. It's too resource intensive. You cannot run that on a DApp node. So for example, if you do something on Polygon, I would definitely say, yes, do use RPCh, do connect from your wallet through RPCh to Polygon or through any other network that you don't run your own node infrastructure on, and thereby be certain that nobody tracks you.
That's very cool. I'm going to have to go dig my HOPR node up. Maybe it's not ready for the ETH 2.0 or like the ETH proof.
Yeah, so on that one, you can run a HOPR node, but you will have a tough time also running an ETH node next to it just because these machines were, much less powerful.
Yeah. So I did want to ask you a couple of things about a story that we published yesterday, and this is a little bit of a different topic. I came across this site called the Ethereum timing dashboard. I don't know if you saw
from
it.
Tony. Yeah, that's amazing.
Yeah, from Tony. And I wanted to get your opinion on these timing games because this is the first time that I had heard of it when Tony posted this on Twitter yesterday. And I didn't know this, but the validators are essentially incentivized to play this timing game where they can delay their blocks from being added into the and by doing so, the more that they increase the time that the blocks are added and confirmed, the more MEV they could potentially capture. And we're talking about a lot of MEV, right? We're talking about multiple seconds of block time. Because like with Ethereum, all the blocks happen within like a 12-second period, right? And I believe all the blocks have to be submitted by 4 seconds. Some people and that are being tracked on the site, you can see how long they're in the slot before they actually submit. So you can see like Frax here is usually submitting all of their blocks under 1 second. They have very little missed blocks. Same with Binance as well too. Like they're all under right around 1 second. But then we have others like Lido who are, it's like 2 to 3 seconds inside the block. And they're not getting a lot of missed slots, but there are a lot of slots that are being filled like, 2 to 3 seconds in. So like is timing games really going to be like a growing narrative as people start reading these papers and see that there is like, if you are a larger provider of these validation services, that you might want to actually like start delaying your blocks as long as possible to try to capture as much MEV?
So I will say something very opinionated. These are all really stupid games. So I'm very grateful that Tony visualizes them so nicely and makes people talk about it, because these are really stupid games. It all comes down to what I said before. If we try to optimize shit, we will end up in square one. We will end up in Wall Street. We will end up, with a handful of gentlemen in like very fancy suits that manage all of this infrastructure for us. This is where we are guaranteed to end up if we're trying to tweak everything just for the last bit of efficiency. And specifically here, what's happening and why I hope this isn't happening is like, this is a risky game. So to just rehash what you said, because I think it's actually very intricate what you just explained, is you as an Ethereum, if you run your validator, right, on your little dApp node at home, right? So every now and then, I think it's something like every couple of months actually only. So it's super rare if you stake only 32 ETH, right? 32 ETH, let's face it, is a shitload of money. So, and if you run one of them, you get a block every couple of weeks or months. And then in this one instance where you can potentially make a bunch of money, you can now play a game, right? You can say, oh no, I'm not going to submit my block right away. Like every sane person who has a chance to make a bunch of money every couple of months will say, I want to play this safe. I'm going to submit this block right away. But no, these sophisticated players, they say, okay, if I wait 2 seconds, 3 seconds, 3.5 seconds longer, I can get more orders coming in. For example, Sam comes in last second. I didn't see him before. He's paying a bunch of more money. I can include him, right? And I can MEV him and squeeze more money out of the system. So that's a bug, right? That's a bug because it will end up with sophisticated players, not the little guy like myself in this little blue box, right? Because I am not going to risk it because my internet connection isn't perfect. My hardware isn't perfect. It will lead to centralization, and it will lead to to sophisticated players playing sophisticated games that the little guys cannot play. So I expect, and this is something which I don't know how it's going to be resolved and when, but I will expect that the Ethereum core developers and researchers come up with mechanisms that are resilient to these stupid games. And I think I don't know what it is, frankly.
Yeah. I think when I read this, and I read the papers as well too, is that it's really hard to tell when somebody's playing the game versus just latency. So if you have bad latency, maybe it takes longer for you just to send that to include the block, right? Like you have like Frax here has super low latency. Maybe they're getting theirs off within like 20 milliseconds, but let's say a solo staker at home has like 200 to 400 milliseconds latency. Like that on its own will create like natural differences in timing. And so it's kind of hard to actually see the difference between who's playing honestly and who's not playing honestly.
Yeah, I mean, what I'm hoping for, and this is, maybe it's in vain, but still, I hope that people do not talk about faster block times. I hope that Ethereum layer 1 will be this resilient place where people can interact with one another and do not try to play these games. If you do want to play these games on a centralized L2, like Base on Coinbase, then fine. But on Ethereum L1, I kind of hate to see these games. I do know that there is a desire to provide faster blocks. Solana, for example, has like sub-second blocks, and that's fine. But like that is a problem. And for example, this is a problem even on stuff like Bitcoin, right? So there's Bitcoin miners, for example, in China. Now, all internet traffic coming into and going out of China passes this great firewall, which is, again, horrible infrastructure that tries to de-anonymize users. But the implication of that is that internet traffic in China tends to be a bit more delayed compared to everyone else. Why does that suck? Well, that sucks because, if you're a home staker in China, you will have slightly higher latencies to get your block included. So we shouldn't punish that, right? We should not punish people anywhere on the planet to run their own nodes. And that's why I hope there will be resilient systems that do not just push for faster block times and more efficiency, but really resilience at this base layer at least.
Yeah, and it's just one of those things where, like, if we see it's happening, I mean, should we punish people for playing the game, or is it just natural?
I'm afraid if we try to punish people, we also punish somebody who runs a staker, for example, out of China and has a bit more latency. And I don't want that. I would hate to see that, right? I would hate to see people, being punished for not being connected to the right peer in a peer-to-peer network. So I hope we rather relax the conditions and, come up with systems that prevent a good part of this MEV to begin with. So that's what you cannot prevent MEV, and that's, I think, even provable. But improving MEV on a larger scale, I think, is something that's way more interesting. Do stuff like have solvers which actively compete with one another to provide the best price, to not have this MEV then in the end on the validators that benefit that. So I think a lot of this infrastructure, including this proposer builder separation, tries to do that. We try to build infrastructure that levels the playing field, that lets the little guy with the little blue boxes running from home and the big guys like Lido play on an equal playing field. And that's what I love Ethereum for. I love Ethereum for having this mindset of constantly trying to level the playing field. And these games that you pointed out, it's a really cool topic, Sam. Is again this, right? Step one is we highlight that there is an issue. Step two is we work and research on mechanisms to improve that. And step three is we roll them out in production. And, stuff like EIP 1559, that there's a burning of the fees is part of that. The whole transition to proof of stake is part of that. That's what I'm, super bullish and interested in Ethereum long term.
Well, wonderful. It was great to hear your opinion on the timing games, as well as hearing more about RPCh. People can find RPCh by going to rpch.net, or also the HOPR website as well too, to read more and learn more. And it's pretty cool. I mean, I have to go out and actually get a new Datino now.
Yeah, and actually for the ones who are listening, we have a voucher code if you want to try out RPCh free of charge, exclusively for the listeners of the show here. You can enter HOPR in capital letters X Leviathan with a capital L. And that voucher code gives you free access for 6 months for RPCh.
So we'll have that in the show note description, that you can go check that out and use that. Sebastian, thanks for coming today.
Thanks for having me and talk about an important topic. Thank you, guys.
Yeah,
Thank you, man.